Hey everyone, it's Evan here from the Trade Risk on Friday, May 26th, here with our weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. We're going to jump right into the charts here. S&P 500, the SPY ETF, finished lower just by 5 cents on Friday. Real boring session heading into the long weekend. We got markets closed on Monday, so a boring end to the week. However, on the weekly time frame, the bulls getting it done 3.4 points higher. That's 1.43% here in the SPY. Right across the board, the IWM finished higher by over 1%, and the NASDAQ 100 higher by almost 2.5% on the week. The Qs closing at all-time highs, S&P 500 closing on a weekly basis at all-time highs. If we go back to the daily chart, not much has changed in our analysis or in this price action since our update on Wednesday, where we did our midweek update right here. We closed at all-time highs on Wednesday. We saw a nice follow-through gap higher on Thursday, and on Friday here we finished just kind of an inside day, very quiet, muted, basically at all-time highs. So the bulls still in control here. We're marching higher. We've successfully V-shaped off of last Wednesday's fallout. This proved to be a nice sort of shaking of the week longs here, and the markets just recovered, saw no follow through the next day, and we just proceeded to sort of march higher in V-shaped fashion, reclaim the moving averages, and then reclaimed all-time highs, and then gapped higher. So it's been a nice strong week for the bulls here. From a price action standpoint, there really isn't anything that you could find much fault with on this recent move. You got the shakeout, you got the nice quick recovery, and that's almost as perfect of a picture as you could get to continue to sort of march up to all-time highs. Now, that said, there are some concerns, right? We highlighted these on Wednesday. There are some things to be concerned about. There always are, but let's outline them just so we're not completely unaware of them. The first, some might argue, well, the volume's been light on this march higher here, which is true. You can see coming in all below for the tail end of this week here, besides Monday, all below the 50-day moving average of volume. Just on the SPY, you could look at other of the major averages as well, or your favorite leading stocks. That's number one. Number two, the IWM Russell 2000 continues to underperform here. Let's go to it now and let's just start talking about it. You can see still trapped within this range, right? We discussed this in last week's in the midweek video, but we really want to see resistance taken out. That's still the standpoint that at least I'm looking at. I'd like to see us take out this cluster of sort of supply here, this 138.50, 139, 138, somewhere in here. We want to see the market start to get some authority above there and start to take that out. Again, thinking about volume, if we look at the weekly chart here and look how sideways we've gone, which that by itself is not a bad thing, right? Digesting this potential run up here from November isn't necessarily a bad thing. This could turn into a very large continuation pattern, but we do start to pull in some other context. And when we look at volume, for example, on the weekly chart, you can see the last 5 high volume days here all go to the bears, all go to the sell volume, and that's over the past 15 or so weeks. You can see we've just got the last highest 5 volume weeks to the downside. So those types of things, not the most encouraging to see on the risk appetite sector on those small cap stocks, but you still have the large caps that are still working themselves higher. Volume not so bad here for the Qs. So the Qs continue to be really the bright spot here. Some would argue that's not all we want to see. We want to see more of a mix. We want to see more of that breadth support from the small caps, and that again is put into the bear sort of warning signs that we want to pay attention to right now. If we go back to the SPY chart, we talked about volume, we talked about the Russell 2000 lagging. Breadth is still kind of just neutral. It's hanging out at highs. It's not doing a whole lot wrong. It's arguably still supporting what price action is doing, given the net new highs are still up, still positive, still, making net new 52-week highs versus lows. And if we look at the cumulative advanced decline line, that's still hanging up at all-time high. It might have closed at all-time highs or just below it. Regardless, it's still hanging up there and not doing a whole lot wrong either. So breadth pretty neutral, price action very strong. Looking at the SPY and Qs, Russell 2000 continues to lag. And the final thing, which we talked about on Wednesday, the staples, utilities, really out in front leading as well. They're not the only sectors leading, but they certainly are. Look at the staples here, XLP just off to the races here, and that's something, again, you don't want to see the market propped up only by the Qs, the high beta names, the big cap names, and defensive sectors of the market. That's not an ideal situation. So there are some things to keep in the back of your mind, depending on your strategy time frame. Those things are more relevant to you. But if you're a trend follower, if you're looking at price to say, you know what, I'm aware of those things, I want to see price start to break down, I want to see price break below some levels, and then I will start to get concerned about those potential divergences. I think that is certainly the viewpoint that we sort of typically have here, and that's something that seems very reasonable, because for all we know, the SPY can continue to march higher for another 5, 10, 15, 20 points, and those sort of divergences, the small caps can continue to lag. We can still have volume that stays light, and those things can still persist while the market sort of levitates higher. So keep that in mind. Hopefully that additional context helps you with your decision-making process going forward. But for now, bulls in control, price action standpoint, trend momentum, all that, breadth still holding up. And then again, everything we just talked about on the downside is potential warning signs, divergences, so on and so forth. Pay attention to them in the background. So that's the SPY. That's in fact all of the major averages. Let's get into some of the other major markets. We'll go to TLT. You can see continuing to hold above this long-term level still, I should say recently reclaimed it back here on last Wednesday, and it's so far holding up. You can see the 8 and 20 period have caught up with price. I think this looks good for upside so long as we stay above roughly this week's lows, 122, 122.50. That's been the general line in the sand that I've been using, and I'll stick with that. I want to see TLT continue to sort of maybe carve out this base, move higher. That looks constructive there from a technical perspective. If we go to USO, this had a little bit of a bounce back off of really a very ugly session yesterday, down -5.25%, high volume day. Again, you can just look back here over the past couple of months in USO and look at all these high volume days are all on the downside, but no follow through to yesterday's move. That is encouraging, holding above $10. $10 has been more or less the level that I've been using as my line in the sand for this market, and it is above it. So reclaim the 20 period. Let's see if the bulls can and perhaps just V-shape us like they did in the S&P 500, for example, with last Wednesday's shakeout. Let's see if that happens here in USO. But above 10, chart's just sort of messy for me. I'm not really that sort of keen on trading this at this level right now, but something we can surely keep on our watch list. UNG maybe a little more interesting just because it's got a little more kind of sideways digestion going on there. You can see mostly sideways for the past a little over a month at this point, and as we talked about in last week's video, really want to get it back. Originally 750 or so, 760, 755. This general area was what I wanted to see it reclaim, get above, and bulls to kind of get back in control. But now, above 770 or so, I'd like to see it more above that level, a little bit of a higher hurdle there. And then on the downside, if this starts to lose 730, look how many times this has been defended. If this starts to wash out below here, we could very quickly be looking back at those March 2017 lows. So pay attention to that. In natural gas, could be setting up for something interesting. If we go to I think the metals next. We saw GLD with a nice breakaway gap here potentially on Friday. Could get filled. Doesn't have to be a breakaway gap. So I'll take that back. But you can see a nice upside gap resolving this range here to the upside. This gap still in place from back on the 17th in the GLD ETF, that is. And on the weekly chart, let's take a look at that. Reclaim the 20 period back above the 8 period. So a little bit of constructive action going on here in GLD. That's constructive to see. If we can continue to push up here, we get the highs above at 122, 122.50 from April of just last month. So short term, the The gold bulls back in control, and the silver bulls continue to remain in control. We got the crossover here, 8 and 20 period, back to the upside. Short-term trend remains higher, I think above $16 or so. As long as we're staying above there, that short-term trend stays intact, and again, the bulls are in control. So that covers some of the major markets. Let's look at some of the sectors real quick, and these are the same sort of culprits we looked at on Wednesday's video. XLU, take a look at the breakout there, nice breakout volume from this range. That is a defensive sector that is leading right now. XLP, same thing, nice sideways consolidation for a couple of months. That's breaking out, not on super high volume, but still just marching higher. Got some nice momentum, some pep in its step right there. XLK continues to work itself higher. Not sure where this volume is coming from on Friday's session, but you can see still just hanging out right near highs. Semiconductors as well. Those still continue to be your leadership group at that point, continuing to be in the market. XLE, you can see got hit yesterday, and again, it's still just battling back to these lows here. So it still just seems like a mess. Want to see it, as I've been saying, back above $69. Once we get back above there, then maybe we have some type of bottom to work with. But for now, it looks pretty messy. Biotech, we haven't talked about this in a little while. I've posted some charts on it, but I've failed to remember to bring it up in these videos. But biotech, lagging here over the past, at least week or so. This week for sure, really not getting anything done. You can see down 0.77% on the week. This is IBB, the large cap, one of the major biotech indexes, and looking vulnerable here if this gets follow through. Maybe this is some type of final shakeout where we can, if it gets no follow through, maybe the support holds and we can blast off from here. But if we start to get follow through to the downside, if we take out this 287, 285, that's going to be a bit of a concern here as we, kind of had this nice move up in March. In March. Pulled back, maybe made a lower high, and then this kind of major support is now at risk. So something certainly to pay attention to. What's the XBI look like? Something pretty similar. So pay attention to this. That'll certainly influence particularly XBI, the Russell 2000, those small cap names. Something to pay attention to next week. And XLF, as we've been talking about this, really just want to see this below 23, above 24. Until then, it's pretty choppy. You could refine that 23.75, 23.80 or so is the top end. But, as long as it's in here, XLF's pretty much chopping around, and we're waiting to see how this really all develops, which way this ends up breaking up or down. So that is the final sector I had to talk about. Thank you so much for watching. Enjoy the long weekend. If you're new here, please do subscribe to our channel. We make these updates several times a week. Thanks for watching, and talk to you again soon.